It's Sunday the 12th of July, so I'm going to do a little video to give an outline for the outlook for the week starting Monday 13th of July. I've been asked to have a look at the Bund, so let's start there. This is actually an hourly chart. As you can see, we've been in a sideways trend for about a month now, so not really much point in looking at the daily trend. We'll just focus on this mostly sideways trend, as I say. Okay. Now, if I zoom in a little bit on this, the big level for the day, to me, looks like 176.20, 176.10. On the hourly chart, we've got the 100 and 200 moving averages there, combined with the 38.2% fib, and a very, very small trend line, only going back a few days. But these 3-4 points here should add up to a strong support level. So this is absolutely key for me today. I would suggest trying along at 176.20, 176.10, maybe stop below 175.95. That's just below this more important trend line going back to the 8th of June. So that's a month old, over a month old. Yeah, stop below the trend line, which is, so if you stop at sort of 175.95, that should give you enough room just in case we overrun that level, which of course does happen. Aussie dollar versus the US dollar, clearly also in a sideways trend for the last month, which is pretty much as expected. We kind of spotted that was the likely scenario, so we've been trading it like that. The hourly chart actually isn't the clearest one. For me, it is the 4-hour chart. Let me just open this one up a little bit so it's a bit clearer. Okay, so here we go. For me, it's the 4-hour chart which is the clearest. Oops. Right, we've got good support around the 23.6% fib, which is around 69.10, 69.00. That coincides nicely with the 100 and 200 period moving averages on the 4-hour chart. Now, you can see that has been holding nicely actually throughout the first 2 weeks of July, so let's watch that level again today. If we break below 68.80, that would be more negative, and 68.10, 68.00 looks like a reasonable target on a break lower. New Zealand dollar in a really nice bull trend for the last 4 months. We struggled at the 500-day moving average. You can see back in June we hovered around it, then it became resistance at the end of June. Now we're holding just above the 500-day moving average, which is around the 65.20 area, so it's working nicely as support. But look at these dojis. It does indicate that the market is likely to start trading sideways. We do have 1, 2, 3 dojis in the last 4 days. We are very overbought, so there is good reason why we would want to trade sideways just to ease those overbought conditions. There is definitely no sell signal, so it's only below 65.20 where I would consider this to have a more negative outlook. We've got a low down here at 65.17, so that was the last proper swing low, I would say. So that coincides quite nicely with that support level too. So again, so I would look for support around 65.20. In the very, very short term on the hourly chart, we've got some support at 65.60, 65.50. So watch that one, and 65.20. Weekly chart for the euro here, you can see was in a downtrend, well, right up until March. But you could certainly consider that the last almost year really has been more of a sideways trend. Now, we've got 200-week moving average at 113.30, 113.40. That's really doing a good job of resistance, tied in quite nicely with some fib resistance around 113.60, 113.70. So every time we've got up there in the last few weeks, we've spiked up, and there's sellers have hit the market anywhere from 113.30 up to 113.70 and drawn back. Again, last week we had that 113.17, the high. So clearly, that's where the resistance is. That's where we've got to watch. Not much more information on the daily chart other than the fact that we've got good support down around 112.00 from the 500-day moving average. I'll just show you the hourly chart. I don't think there'll be much information on there. Not really, but that certainly does emphasize the fact that we've been trading sideways for at least a month, and that is a very difficult trend to trade. So you really do have to wait for your levels. Gold has been in a bull trend for quite a while. I can't say it would have been easy to hold a long position over this period. We've really had some significant pullbacks in gold. Obviously, we had this turmoil when the whole COVID thing hit the world. But even since then, holding a long position would have been difficult. Pretty much just sideways through the end of April to the beginning of June. And it's only in the last few weeks that we've really taken off again. Looking at the daily chart, that was the weekly chart. Looking at the daily chart, it's now key that we hold on to 1796, 1794. If you've been following my reports, and I've been posting them for free this week, then you'll know that that's been a good support level, and it's worked beautifully in the last couple of days. More as a scalping level than a swing trading level, because we've bounced up to sort of 1806, 1807. So there's been a good 10-point profit in that scalping trade. The hourly chart will also show that maybe a little bit more clearly. Let's just have a quick look at it before we move on to oil. Yeah, as you can see, so the mid-set 90 area has been a good support level, and there's been scalping opportunities. So watch that again today at the beginning of the week. August crude had a really good run up from that turmoil in April, that April expiry, where we saw oil trade down to minus $40 a barrel. But since then, what a recovery. Now we seem to be in a consolidation phase, which is pretty much as expected. We spotted that sideways trend was likely to develop, and so it has. We are in a triangle pattern right now, a consolidation triangle pattern, which is usually a continuation pattern. So if anything, we'll probably see a break higher, but for right now, just trade the pattern, trade the triangle. So $41 is resistance, support down at around 38.60. These moving averages are having some effect. So 40.30, 40.20 would be the initial support area, and then we've got some support down at 39.10, 39.00. But tricky to trade the sideways trend, so you really have to wait for those levels. Wait for those identifiable support and resistance levels, and just try and scalp maybe 70 to 100 pips on a trade. DAX also in a sideways trend now after a good run up from March 2. I'm just going to have a quick look at the weekly chart, make sure there's nothing I'm missing. No, not really. That looks quite confusing to me. Right, daily chart, yeah. Holding up the 200-day moving average, so at the moment it's relatively positive, but I do think more sideways action is likely, again, in a triangular sort of consolidation phase. We'll go to the hourly chart just to zoom in on that triangle pattern, see where we are. Actually, this is probably more relevant, this slightly upward sloping channel with that upper trend line there and lower trend line there. But let's keep an eye on this trend line as well, which would be the upper trend line for the triangle. That comes in at 12,800, 12,810. So that's going to be key on the upside. On the downside, we've got some moving averages to watch, but I don't think they're really playing much of a part at 12,600 and 12,500. But the 500-hour moving average certainly is making a difference at around 12,370, 12,360. And then we've got the lower trend line down here at 12,275. It's a rising trend line, so as the week goes on, that will get a little bit higher. Eventually, it'll meet that 500-hour moving average. So again, we're looking for scalping opportunities in pretty much all these markets through the summer months while we wait for a breakout. S&P, good run, and then followed by a triangle pattern again. So consolidation pattern, we did guess that this would happen a couple of weeks ago, that we would start trading in a sideways direction, and that's exactly what's happened. So watch the upper trend line being tested on Friday around 31.70, 31.80. A break high is obviously positive. There is no sell signal despite the overbought conditions, so I would not recommend any aggressive shorts. But trying to short the trend line, fair enough, for a little scalp. If you're lucky, we might get down to 31.10, 31.00 for some profit taking. Best support level very, very clearly down at 30.40, 30.30. If we happen to get down that far, it would certainly be worth a long position. If you are not already a subscriber, have a look at our website, daytradeideas.co.uk. If you scroll down, you'll see all the products that we have available. If I can actually scroll down, there we go. You'll see all the products that we have available for subscriptions down here: technical analysis, forecasts and trade signals, forex, commodities, stock index, futures, and even a fixed income market. Just click on the subscribe now button and you'll get a free 2-day trial with most markets, which gives you the opportunity to cancel before you start paying after 2 days. And if you're still not happy after 2 weeks, we'll give you all your money back.